Warren Buffett, a longtime commentator on inflation, has shared valuable strategies to navigate and thrive in an inflationary environment. In his life, he has gone through multiple recessions and his net worth is at $116 billion at 93 years old. Nowadays, inflation has emerged as a pressing concern as we approach another potential economic downturn. Its impact extends beyond the American economy, affecting Europe and various parts of the world. Actually, we only had 2 years out of 78 years not having inflation after World War II. However, inflation is negatively impacting our lives due to easy monetary policy during COVID-19. Small amount of inflation can help the economy, but high inflation, like now, could be harmful to the economy and ourselves. Let's momentarily shift our focus to you. Are you content with your financial future, or do you find yourself entangled in expenses, struggling to make ends meet? If you are seeking a path to financial stability without resorting to excessive debt or embarking on an economic crusade, you are in the right place. In this video, we will unveil 5 strategies that Warren Buffett used to combat inflation. Let's see what they are. Number 5. Limit what you want. Charlie Munger once said, "One of the great defenses, if you are worried about inflation, is not to have a lot of silly needs in your life." In today's world, there is an abundance of temptations and attractions, especially with the relentless algorithms that suggest products for us to purchase online. It is crucial to distinguish between needs and wants. Needs are essential for survival, such as food, clothing, and possibly a car. Wants are desires that can enhance our lives but unvital for existence. If you are unsure where your money goes, a budgeting app can solve that problem. At the end of each month, go over all the expenses and figure out what are the expenses you can eliminate. Continuously doing it for several months, you will learn how to save money. A great example is Warren Buffett. Despite his wealth, once used coupons to pay for a meal at McDonald's while dining with Bill Gates. Keep your life simple and give away things that you don't need. You can pave the way for a more financially secure future. Number 4. Invest in TIPS. TIPS stands for Treasury Inflation Protected Securities. It is a type of Treasury security issued by the U.S. government. Warren Buffett endorses TIPS because he is concerned about inflation. TIPS pays investors a fixed interest rate, but the principal value of TIPS rises as inflation rises. In essence, investors will receive more than the invested principal since inflation is happening almost all the time. Let's see how it works. For example, you invest $1,000 in a 30-year TIPS at the interest rate of 3%. In the first year, you will receive $30 as interest with a 3% rate of return. Then, from year 1 to year 2, there is an inflation rate of 2%. Your principal becomes $1,000 multiplied 2% is equal to $20. $20 plus the initial investment of $1,000 will give you $1,020 as the principal in year 2. With the same interest rate of 3%, you will receive $30.60 as interest in year 2. Conversely, if inflation were negative, you will receive less in interest and the principal amount gets lower. But this does not happen very often. Warren Buffett views TIPS as a practical choice for investors seeking a secure and inflation-protected investment. He values the stability and dependability that TIPS provide, especially for those focused on safeguarding their capital and countering the erosive impact of inflation. While the returns may not be exceptionally high, incorporating TIPS into your investment portfolio is necessary. Number 3. Invest in business with minimal capital requirements. Starting your own business today could be challenging, as the rising of labor and material costs contribute to a higher entry threshold. But this should not deter you from starting a business. I am sure you have heard people saying work smarter, not harder. So, working smarter by choosing the right field while working hard remains essential. If a business demands initial investment in leasing spaces, purchasing machinery, and hiring large workforce, it may not be a suitable business model for you in today's high inflation environment. Businesses with excessive input requirements should be avoided. Thanks to the internet, it provides us way more options than before. It allows individuals with limited capital to attain wealth quickly. For instance, Microsoft 365 Office is sold to most companies and individuals around the world. The cost of building and maintaining the program is fixed. Selling an extra copy of Microsoft Office does not cost more money. As individuals, we do not have the capability of developing softwares like Microsoft, but we can do something similar. If you possess the expertise in certain fields that meet the market's demand, you can write and sell an ebook online, mirroring Microsoft's strategy. Selling an extra copy of ebook does not require more time or effort as input. Alternatively, if your content is best conveyed through videos, you can offer online classes, a more efficient approach to generate business. The key is to start a business that does not demand heavy capital investment. Number 2. Choose companies have pricing power. Investing in companies with pricing power is a wise strategy. Pricing power refers to a company's ability to increase prices without losing customers, often due to strong brand loyalty and customer willingness to pay more for the same product, especially during inflation. Well-established companies like Coca-Cola and Apple are great examples of this valuable attribute. Such companies have a long-standing presence in the market and the ability to raise prices as needed. For instance, Coca-Cola has successfully increased the prices of its various drinks without loss of customers. This has led to an improvement of operating margins, making it an attractive investment option. As a result, the company was able to increase its dividend in the past 2 years. As for Apple, Buffett's perspective highlights the extraordinary nature of the company's pricing power. People are willing to pay a premium for an iPhone and may even prioritize them over expenses like a second car. This reinforces the idea that investing in companies with pricing power can be a sound strategy, as it reflects not only the customer base but also a competitive edge in the market. Number 1. Invest in yourself. Warren Buffett said, "Investing in yourself is the best thing you can do. Anything that improves your own talents. Nobody can take it away from you." Before investing in anything, the very first thing you need to do is invest in your personal growth. In this fast-evolving world, where technology drives rapid changes, continuous learning is imperative. Investing in yourself might seem daunting, but the longer you wait, the less likely you would get started. Like some of us, Warren Buffett used to be very afraid of public speaking. Then, he spent $100 to take a public speaking course from Dale Carnegie. This smart move has transformed his life. Even today, Buffett can still hold the yearly Berkshire Hathaway stockholder meeting for hours as long as he has his Coke. Whether you are a lawyer, engineer, or doctor, your education was paid in old dollars. Don't forget to continuously educate yourself and brush up your skills. With inflation, you are providing your services in new dollars. This can't be easy if you are not constantly investing in yourself. The key is to position yourself as a top-tier professional in the area and make yourself irreplaceable. We cannot control how much the interest rate is going to go up and when the inflation slows down, but we can always make sure to invest in ourselves so that we are irreplaceable. Fortunately, with an abundance of online resources, it is easier than ever to acquire new skills and knowledge without significant financial investment. By leveraging these resources, you can adapt and thrive in this rapid changing economic landscape. Warren Buffett did not succeed overnight. It takes time and discipline to implement his 5 strategies. Cultivating a growth mindset and embracing lifelong learning will not only enable you to navigate economic challenges effectively, but also unlock doors to new opportunities. Serious inflation like this time could still last another year or two, and we may have limited control over it as individuals, but we can work hard to rebuild our own economic resilience to face economic challenges in the future. Thanks for watching. Please don't forget to like this video and subscribe for more content. See you next time.